Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking energy, some strength in both crude and natural gas. Natural gas is interesting considering the warmer weather here in the Midwest, although it is not expected to last. But crude oil specifically seems to be basing. WTI seems to be basing above 61. It has spent 4 of the last 5 days with higher closes now. And today, although we started off quite a bit higher, above 62.50 with a high of 62.65 in toward the middle of the day, we did end up below that 62 level, but still higher on the day. So crude tends to be on a little bit of a bullish foot, again up 4 of the last 5 days. We did see rig counts rise higher for 4 consecutive weeks now, rising by 8 oil rigs on Friday. We haven't talked about that much. Light day of trading yesterday with the U.S. holiday, but today the trading has come back in full force. And again, crude oil seems to be on the bullish foot despite those higher rig counts. We have seen rig counts virtually unchanged since last August for the most part. And now we're seeing a little bit of an uptrend in those rig counts. U.S. production has increased despite the flat rig counts. We expect it to increase even more given the addition of the new rigs. But OPEC talking to analysts and reporters about wanting $70 crude oil. Now that's speculating there could be some sort of adjustment to the cut. Right now you've got record compliance from OPEC, record compliance from the non-OPEC producers, and we've got high refinery rates pulling some of that crude out. So this week we might actually see draws in the API and the EIA numbers, but as of right now, the higher rig counts, last data we have, and it is not pushing crude oil lower. The other thing that's not pushing crude oil lower is the dollar, although the seasonality of crude oil might be pushing it higher. Crude is following its seasonality pretty much to a T, where it starts off a lower in the first week to 10 days of February and then rallies throughout the end of the month, and then pretty much rallies all the way in through about the first week, second week of June, where it starts to taper off a little bit. Again, that is preparing for summer drive-in season demand, some extra pull out of crude oil inventory for the refineries to build up that winter blend so they can go into turnaround prior to that summer driving season, something I just mentioned. And despite the stronger dollar, crude seems to be more attached, at least at this point, to its seasonality. Now we get crude oil data every single week, API, EIA, and the rig counts on Friday, so that data could turn things around. But right now, crude trading higher in line with the seasonality play. This is Bob Iaccino talking crude oil from the CME Group trading floor in Chicago.